Hello, and welcome to this episode of Moments in Credit Union History, brought to you by CUNA Mutual Group. Today, it's my pleasure to welcome Caroline Willard to the show. Caroline is the CEO and president of the Cornerstone Credit Union League, which is, of course, Texas, Oklahoma, and Arkansas. Welcome to the show, Caroline.
Thank you so much, Stephanie. I'm so happy to be here. This is such an honor.
Well, we're happy to have you. In this episode, we want to sort of follow the path that you took to get to where you are today. I know that your career did not start in credit unions, much like some people that we have interviewed. So it's got a few little twists and turns that I think maybe have a few good stories in there for us.
Yeah, well, I hope so. I mean, when I was preparing, I thought, what would be interesting? It's hard to look at your own career and think that it was anything about it was about anything else other than just putting one foot in front of the other. But when I started thinking about how to talk about my journey within the credit union movement, it struck me that, some of the opportunities that I've had have come from some unlikely places. That at a few points in time, there were external events that happened that really created new avenues for credit unions. And it was unexpected, and it created opportunities, not just for credit unions, but for me in particular. And so I think maybe I'm being philosophical or introspective or something, but we're nearing the end of a global pandemic, and that has fundamentally changed the way that we live, the way that we work, the way that the whole world behaves. And so I was thinking, wouldn't it be wonderful if this is one of those times, right, where adversity creates this slingshot effect that brings a whole new era of growth? I would love to believe that.
Absolutely. I think that that certainly that if anything good can come out of the pandemic, it is that we have changed as an entire industry. So tell me a little bit how you started in the credit union industry.
Well, sometimes I say that I owe my credit union career to the demise of the thrift industry. And it's not gone entirely, of course, but we don't really talk much about thrifts anymore. In fact, when I'm speaking to a group of young credit union professionals, I have to explain what a thrift is, because really they're pretty much a commercial bank these days. But there are a lot of similarities with credit unions. So like credit unions, thrifts were originally created to help people pool their money. And like credit unions, the modern charter for thrifts was formed right about the time of the Great Depression. And like credit unions, you're getting the picture, right? The early thrifts offered higher rates on deposits. And so that gave them a little bit of a competitive advantage as compared to commercial banks. But they had fewer, like credit unions, they had fewer types of accounts and less in the way of things like wealth management and foreign exchange, insurance products, and that kind of thing that you would find at a big commercial bank. So here's this segment of the financial services industry, and when markets were deregulated, when the financial markets were deregulated because Jimmy Carter signed the Monetary Control Act in 1980, the interest rate ceiling was removed on deposits, and so that took away the competitive advantage that thrifts had for market share. And so what happens a lot of times when that sort of external event occurs is you start looking for new ways to make money. And so in the case of thrifts, they started looking into riskier and riskier lending activities and investment activities. And so hundreds of them failed during that era. We definitely know, about the 80s being a time when thrifts contracted. We also know that the main purpose of thrifts originally in the US economy was allowing working class people to get mortgages to buy single family homes. And so that's a little bit of the history. And as I stopped and thought about it, it really made me think, my goodness, there are so many similarities to how credit unions kind of grew up. And so flash forward then, this is where I come in. I had been working at a thrift in the 90s, and all I knew was that something was missing. I mean, I loved helping consumers finance their lives, but the organization itself was a little bit soulless.
Okay.
And so I can tell you, after board meetings, I would watch, and our board members would trot on down to the branch in Newport Beach, California, not exactly a low rent district, by the way, and they would cash their checks for having attended that meeting. And it was perfectly legal and appropriate for a thrift director, but it seemed crass. It seemed crass to me. And so I kind of bristled at that, and I didn't know why. But more, I think, tellingly, was that this particular thrift was famous for what you call the option arm or adjustable rate mortgage, which allowed consumers to pick on their mortgage payment whether they paid a traditional mortgage payment or a reduced amount of principal or no principal, interest only. And that didn't seem to be in the best interest of consumers, because that meant that they were never going to escape from their debt. And in fact, if the housing prices tanked, so did their equity. And so they were suddenly upside down in that property. And so at the peak of this particular thrift's lending activity, about 91% of their mortgages, their single family mortgages, were option arms. And so if Stephanie, if you and I were filming a movie right now, that would be where the scary music comes in. So,
exactly.
Shadowing is really, really bad.
Exactly. And in March, the regulators and
yes, yeah.
Absolutely the spooky music, the shadows. But I think that certainly your story speaks to the fact that that's not always all bad.
Right. Well, and so, I kind of read the writing on the wall. I can't say I was prescient. I can't say that I knew what was going to happen to that particular thrift. Mm-hmm. It just didn't feel right. And so in 2001, I'd been disillusioned with what a thrift was about. So I accepted a position as a VP of marketing at American First Credit Union in La Habra, California. And even during the interview, I knew that something was different. I mean, the entire executive team interviewed me, and I thought, well, that's kind of democratic of them, isn't it? I thought it was a little bit odd, but I was okay with it. And then one of my first projects was to write a marketing plan. And I turned to one of my coworkers and I said, I'm not even sure where to start. And he said, just call my friend Lisa over at Orange County Teachers Federal Credit Union. She'll give you their marketing plan. And I'm like,
really?
There is no way she'll do that. And I sort of smirking, I called Lisa at Orange County Teachers. And of course, we know how that story ends. She gave me the entire marketing plan. And I thought, that would have never happened at a thrift. That there is just a sense of collaboration amongst credit unions, and I was sort of amazed by that and really charmed by it, and so that felt completely different.
Sure.
And then we had this volunteer board of directors. I think I sent y'all a picture of me with Danny Doss, who was my first board chairman, and he was a grocery store manager. And now he was on my board of directors, at this financial institution. And so it just seemed, again, so democratic and so very much tuned into the needs of working class people. And that was very different than what I was used to in Newport Beach, California. So I immediately fell in love with the model.
Embraced it, absolutely, for sure. Yeah. So you weren't there long. You then sort of jumped to co-op, is that correct?
I was at the credit union for 5.5 years, and then I moved to Co-op Financial Services. I think I was employee number 220 or something like that, and they have well over 1,000 employees now. But so I took on a few different roles at Co-op, and I'd been there a couple of years. And remember that foreshadowing that I was talking about a minute ago? In 2008, after I'd been at Co-op for 2 years, I got wind of the fact that the thrift that I'd been working at had actually failed. And it was chilling. And if I'm talking about the arc of credit union history, it really, for me, solidified the fact that I love that credit unions, they don't take a loss at a taxpayer expense. And in fact, this thrift I worked at absolutely did. It cost the FDIC and taxpayers quite a bit of money. And so, think of the year, it was 2008, and all of these major thrifts like Countrywide Financial, Washington Mutual, they're all either failing or getting sold. And so it really brought home the fact that a democratically controlled cooperative like a credit union was just so much healthier for the US economy, for consumers. And so that's why I care so much about the intersection of the history of thrifts and of credit unions.
For sure, absolutely. So fast forward again to Cornerstone League, one of the largest leagues, of course, in the country. The museum is, of course, very closely connected with Cornerstone League. We're big fans of you folks down there. So tell me what's going on at Cornerstone League these days and how you guys are doing.
Well, we're doing great. We serve just under 500 credit unions in Texas, Arkansas, and Oklahoma. And, it's interesting because doing advocacy in that footprint, it's one of the reddest regions in the whole country. And yet, even in that region, we are undergoing a bit of a transformation. And so credit unions are changing, the politics are changing. And we've got varying demographics, quite a bit of rural expanse. I'm not used to that. I'm a Californian. And so if you drive from Dallas to El Paso, you are halfway to Los Angeles. And so the expanse that we cover is very different than what I'm used to. And so because of that, there are a lot of very, very small credit unions.
For sure.
We've got like 80% of our membership that's under 100 million in assets.
Mm-hmm.
And so a different kind of landscape. And so credit unions, what they need in the Cornerstone footprint is different than what, in my native state of California, what credit unions needed. And yet, we do tractor loans. We do things that are specific to the region. So it's a lot of fun. I have a great team, and I'm just really grateful for the opportunity.
So it certainly speaks to that 360 advocacy that CUNA employs, and I think that you're able to, like you say, address the Californias of the world as well as the Texases. So I think that it's certainly meeting a need there, and we're thankful for it.
Yeah, and I love that you brought up 360-degree advocacy, because I know back when I was in California, I was, working at a credit union, and I said, why don't we do any legislative affairs? Why all the credit unions around us are doing these great projects and getting engaged with legislators. And so we started up a legislative affairs function at American First Credit Union, and we in fact were the first credit union to offer payroll deduction for PAC contributions. And the reason I bring that up in this context is back in that day, I was a constituent of Congressman Ed Royce. And Ed is a hero to credit unions everywhere, because in 2 different sessions of Congress, he carried legislation for us. And in fact, his legislation was called the Credit Union Regulatory Improvements Act, and he ran it in 2 different Congresses. And I was a constituent of Ed's, and so I got to spend a lot of time with him, invited him to the credit union for an employee rally. And God bless him, because that particular piece of legislation in both iterations was weighty. It carried with it the wish list of so many things that credit unions were looking for at that moment in time. And that being the case, it was really tough to get bipartisan support. It was really tough to get enough co-sponsors. And in fact, we never did get it passed. So flash forward, now I'm at Cornerstone. I serve on the CUNA board of directors, and 360-degree advocacy is something that CUNA talks about a lot, because you don't just pass one giant Credit Union Regulatory Improvements Act now. We take it off in bite-sized chunks, and we do a little work with the regulator, and we talk about different compliance methodology, and so by doing that, we work with FASB, for example. By doing that, we are able to incrementally make lots of changes all the time instead of one big sweeping wish list.
And I think that certainly speaks to exactly what credit unions have always done. It's, find one individual need, meet the need, and keep moving forward. There's a lot of steps, but it's, one step at a time, for sure.
Yes, indeed.
So, yeah, excellent. Well, thank you for being part of this moment in credit union history, Caroline.
Yes, I'm pleased to have been invited. I feel like I'm an artist who's releasing their greatest hits album, and they're not done yet. So there's so much more story to tell, and I'm grateful to be part of the movement and just be one of the people contributing.
Well, thank you again. This has been another episode of Moments in Credit Union History, brought to you by MICUH. Thank you.